All right. How are you guys? Let's do a quick back test of what really I'm expecting or what I am into, right? And want us to do some quick back test, and also later on we will be trying to find uh, we can be writing our work plan for the week. But as of now, what I want us to do is some quick back test of what has actually been happening and see what this week actually has been for us. So this is the weekly time frame, and from the weekly, what you can notice is we have been really very bullish. We have been very bullish, other than the prior week whereby we had this kind of consolidation, and we created something very nice, which was this bullish fair value gap. So assuming that we really want to see how this candle has been printing, let me find something. Yeah, let me have this replay. So this where we had the market printing from last week. So this is the chart that we did have. Now, prior to that, what I'd usually do is try to find what could attract the market going higher, and also what will attract the market going lower. So this is the high. If you are really to be bullish, then what I wanted to see, the price, whatever would push the price higher, will definitely be this high over here. And if price was to be bearish, and let me ensure that yeah, it's already here. So if a price was to be, let me get rid of these many markups, even this not necessary, vertical, horizontal, yeah. Okay, there we go. If also we were to be bearish, then what I want to see, the market, what was to boost push prices going lower, we have these weekly low over here, and that weekly low is nicely overlapped with a bearish, a bullish fair value gap. So there's no need for me to mark up the bullish fair value gap because the low is already representing that. So since I have these two two levels that are, if we are bullish, then this is what I want to say the market gravitate higher to. And if I'm really bearish, this is the low from which I'd really want to observe what is happening within this range, because we might trade into it and then we will continue lower, because we also have these other fair value gaps resting below here. But also, if maybe we react into it and then we react bullish, then this will be my target. Or also, if the market would want to open at this level, trade higher, then later we can drop, or we have a continuation going higher. There are many things that are most likely to happen within these within where price had actually closed. So knowing this, what I do is I drop to the most immediate lower time frame, and from that lower time frame, that's where I'd really want to see how price will be trading. So this is the highest high right here, and also the lowest low over here. So this is the lowest low that we have, which is a weekly fair value gap, and also that's the high that we do want to see the market gravitate to. I don't know, we are lacking some candles over here, but it's okay. Since we have this level, what we need to do is this was the Friday. I don't know why this is doing like this. Uh, let me maybe refresh this so that we get to have a clear chart. I don't know, hopefully we'll have whatever. It seems it's like that. So if we go to the weekly, back again for us to ensure that we have the replay mode on. So these are the two levels that we've already marked up, the high and the low. And now from the daily time, we want to mark up the context area. From which level should I maybe expect to have to see how price reacts to that. So from the daily, what you can see is at this moment in time, we created the immediate rebalance whereby we didn't really form a fair value gap. On Thursday, we pushed higher whereby we created the high of the week. And on Friday, this is the candle that actually printed, closed around here. It should be a bearish fair value gap because something like this, because we closed at this level, want to see the next candle should have opened and maybe closed a point like this that also created that rejection. So this should be a bearish candle like this. I don't know why it's not there, but that's how actually on Friday printed out for this one. So since we have that level, assuming this candle had closed at this moment in time, and my context area, I usually want to see if we can be forming a daily fair value gap or if the market will be trading and creating the immediate rebalance. And where do I have my immediate rebalance? My immediate rebalance will be because we have seen maybe this candle that should be present here close at this level, then my immediate rebalance is at this level. Hopefully you're getting what I mean whenever I'm trying to just doing an assumption of that candle. I need dotted here. So this is the immediate rebalance because the next candle closed bearish. If the market will rally to this level, maybe trade into these this immediate rebalance level, then somehow could we reject and then continue towards this low, or most likely would we maybe consolidate on Monday to create a fair value gap, then a drop lower. Let's see what the 8 hour time frame has. Let's give it a minute because of the replay. It usually takes some time. Yeah. So this is what we have. This is where the market actually closed on Friday. This is where the market closed. I don't know from the daily. We don't have these candles, but from the 8 hour, I guess we can see. And from the 8 hour, what we can really tell is we had the market forming bullish fair value gaps that didn't really do its job. Whenever a fair value gap is doing its job, is something like this. This fair value gap did its job. Why? Because the market traded into it, and we can see that these the 50% is being respected because there is no candle closing below the 50% level. If I can. There's no candle closing below the 50% level. And the job of this fair value gap is to cause a displacement above this high. And we have a displacement. Whenever we're talking about displacement is some heavy movement with a fair value gap being formed. And what we can see here, the market rallied higher. We formed this displacement, meaning this fair value gap did its job by displacing above this high with a fair value gap. Now, since we have created another fair value gap, which is lying over here, since we have created this fair value gap should actually be doing its job now, because the other one has already done its job. This is the most newest fair value gap, and its job is maybe the market to trade into it, and we can see that was nicely respected because this candle, we can see they respected the 50% level of this 8 hour time frame. Then for the next candle, we formed a bullish engulfing bar, which should have pushed prices going higher. But what you see, we only had a sweep of liquidity. We only had a sweep of liquidity. I'm looking for a trend line. Seems I can't find it. So what you can see is we only had a sweep above that level other than a run. We don't have a run. We only have a sweep, something like that. Meaning this fair value gap, it's not doing its job. And then we had the next candle plumped lower, closing bearish. Didn't really confirm as a bearish engulfing bar, but what we can see is it did close below this candle body opening price, and also we closed below the 50% of this level. And since this fair value gap had already been traded, it's no longer valid for me. I usually want to see a fair value gap being traded into once. Whenever we saw the market plumbed lower and this fair value gap had already been utilized, that fair value gap had already been utilized. Remember, this is the daily daily immediate rebalance level. What do we see the next candle do is this displaced lower, and what we can see is that we disrespected this bullish fair value gap, this candle closing really bearish, and then the next candle we pushed back into that range, and if we go onto the lower time frames, we like to identify towards what attracted this market retracing even that deep, right? We'll notice what made this market retrace this deep. Then we had that rejection. So for now, from the 8 hour, what I did notice, from this low to this high, we traded to the premium levels, and then the market we can see as rejected. From the 8 hour, we don't have anything really much. We don't have a fair value gap, but what we can see is we only swept some liquidities, and the market is now displacing. Now I guess we can go further into the 4 hour time frame, try to look for the structure, and try to look for what the market actually did. Why did the market displace higher, as we've seen from the 8 hour time frame, and from what levels can we anticipate to see the market trade into? So from the 4 hour, the same, we have this liquidity sweep. The 8 hour fair value gap didn't do its job. Same to this 4 hour fair value gap, we didn't do it. It didn't really do its job, because price consolidated within here. This fair value gap was respected. There's no candle closing below it. We displaced. We only had a sweep of liquidity above this. Then we displaced, forming this bearish fair value gap. Then on Friday, what we see, the market retraced into these fair value gaps, and then we planted going lower. Now, since we are coming to this new other week, let me use my handkerchief. What you can see is we have many bearish arrays that are being formed here more than bullish arrays, because we have liquidity sweeps, we have market structure shift being formed below this low. The market broke that. We tapped into that again. Also, this 4 hour fair value gap. We also had liquidity sweep over here. Now we also have another target over here. We have so many arrays that we'd want to see that are confirming bearish prices. Now, since we know that, and from the daily, we have this as our daily immediate rebalance, is it likely that we can see the market retrace to this level, which has already been balanced, then we continue lower? I don't think, to me, it's kind of low probabilities, but whenever we say low probability, it doesn't mean that it can't actually happen. That's what I had for my last week. But if it happens, then it gives us a good guarantee that we have traded maybe into the premium levels. We are sweeping these highs, and then if we have a confirmation to go lower, then that's what we can do. Now I can use my replay, and because I don't usually trade before the New York time, let me ensure that I have a vertical line that will give me, let me change the time. I think currently our New York, let me see from trading view what I usually use. Yeah, -4 New York. So also this one I should shift it to -4. All right, UTC -4. All right, so this is what I have. So before the New York time, before the 9 a.m. candle opens, let me have a step back. So before the market reaches this level, I want to see what the market could have already done, because at around before that time, the market maybe might be consolidating or maybe displaced before this time, and we'll see. Because I usually come at around 9, that's what I will wait for. Then I'll play this bar. So the market opened up, we traded lower. We have closed below this, which is maybe, are we likely to see the market just spool towards this target? Because also we have no liquidity, any resistance around this level. What we have is just liquidities only. Maybe the market can just pull, continue lower before our time, but let's see. Then we had that consolidation from the 4 hour. What the next candle did is we swept the prior candle low, then we kind of rejected. We haven't really formed a 4 hour bearish fair value gap here, so still. Then Later on, at around 1, the market has pulled back within the range. Now, whenever I see this, we'll play the next candle. Yeah, the next candle is around 5, which 5 takes 4 hours before it closes. So we have seen the next candle should be the New York candle, the New York 9 a.m. Open, 9:30 open for these indices. So what I do is I want to identify whether the market has retraced to the OTE levels. So from this high to this low, we can see that the market has already retraced to the 50% level. We have I told you guys, remember, this is a daily RR. It's kind of low probability. It's not impossible. Now you can see, if I could have had it, I didn't really want to see the market trade back into that, then I would have been wrong. Also above it, we have some liquidities resting above that level. So if I shift that this high, maybe want to see how will price trade above this high. How will price trade around that high, and see now from this time frame I can drop into the 1 hour time frame, whereby I should be waiting for more confirmation. I should maybe wait and see what will be happening around that moment in time, because currently we are in a bullish structure, but long term wise I want to be catching some shots. So from this level, that's where I will be watching what will be happening. Currently this is the 8 a.m. candle. Let's play one candle. Yeah, at around 9, what we saw, the market just opened, we pull lower. Yes, it's not bad, because we have traded around this around the 50% level, but we have these liquidities also. I wouldn't really rush in to take a position here, or maybe drop onto the lower time frame. What I'll do, because we have formed maybe some relative equal lows, if I should be bearish towards these target, remember these are the lows that we are talking about. These lows, that's this line that reflects here. If indeed I'm bearish, what I really want to see is a break through these lows. If we see a break over here, that's when I really want to engage in bearish prices. But if there's no break, then I'll still maintain my bias. So at this moment in time, I'm not really interested in taking any position. And now I can drop onto the 15 minutes, try to see. But I have my specific 1 hour level that I am watching below this low. And I think this is the 9:30 candle. We have the 9:30. And it's usually sometimes manipulation. And we have some relative, all these are relative equal highs. There's nothing here that could prevent the market from going higher into the OTE levels. And do we have anything that could attract? Let's see. Until we have a break, that's when I want to see a continuation towards this low. For now, not really. So the next candle, we swept the prior candle low, then we manipulated higher. Something that doesn't really look bearish. We have this bearish fair value gap. Want to see. Then the next candle, we had that drop lower. We haven't really traded into this 15 minutes fair value gap. Then we've seen the market drop lower. And at this point in time, we had as a major liquidity pool. Are they the London lows? No, these are the London lows. What we've seen currently is the market has swept these London lows over here. These are the London lows. And you can see we only wicked that because London is from 2 a.m. to 5. Also, what I really love sometimes watching are the liquidities, major liquidity pools. So from 2 a.m., the lowest within that range is that to 5 a.m. And see, yeah, this is the Asia London session. What the market has actually done, we haven't run through this. What we've seen is just a sweep, and then the market has rejected. If we do run through it, then we'd maybe anticipate or expect to see the market dropping lower. The next candle, not really a sweep through that. We haven't closed below, some wicking. Now, if this scene had happened, since we have closed below that, and also hopefully this at around 11:15, so the prior 1 hour candle didn't wouldn't have closed there. So at this moment in time, what I'm seeing is we have this fair value gap being left open. The market traded, created a market structure shift. We have this fair value gap which has been traded into. We have closed bearish. Now I think onto the lower time frame, especially the 5 minutes, can I have maybe a trade that can give me a 1 to 2? So from the 5 minutes, since we have closed below there of the 15 minutes fair value gap, what I'd want is, let's see whether this short could have been valid. Immediately this candle has closed the 15, and where do we have an intermediate term high? This is the high because we have this short term high onto the right and also this short term swing high there. And can it give us a 1 to 2? Kind of deep, but the lows are at around 1 to 1.5. Let's see whether 1 to 2 would be valid. So at around, if whenever we reach this level, I should be trailing my stops. Then the next candle was bullish, back into that range. Now we were consolidating, which is not a nice thing, because if we go back to the 15 minutes, if we go back to the 15 minutes time frame, uh, whenever we are seeing these levels being respected, what we want to see is the market plumped lower. Somebody texting me. What we want to see is the market should be plummeting lower. But whenever we see this kind of ranging there, it should be concerning. But since you are in that trade and everything that you wanted to see is actually has happened, and now you can just take in the gamble, just not a gamble, follow your plan, just have a position and see what will happen. Then we break even at that moment in time. The market is around break even, not really moving. So we did range within that level for long. Then we displaced lower. With this displacement, I think now, because what we're seeing is these highs that the market formed here consolidating with these fair value gaps. Now I think I should wait for another swing high to be formed, because this will be now the new intermediate term high. Let's wait for the swing high. Now we have confirmed this swing high, and what do I refer to an intermediate term high? An intermediate term high is whenever we have a high that has lower highs both on the right and on the left. So this lower high and also this lower high. So now I can reduce my risk, because I think that high should be protected, and also try to observe what the 15 minutes is actually doing. So 15 minutes we have displaced nicely. So let's go back to the 5 minutes. So the risk currently being reduced, and since we are in a bearish market reacting off this breaker block, we have a breaker here because we have high, low, high that swept those liquidities, and we have closed below this. So within this range, that's where we have a breaker being traded into, paired with this fair value gap, nice unicorn, and maybe this will be an ideal entry right now, but since we have a position, what I'm getting to learn is not adding onto my position unless I've actually fully break even. So have that in mind. Consolidation again. Now the market's pulled, and with how we closed over here, with how this candle massively closed, right, closing above this swing high, is not really looking good. And what was this? Oh, these are our fib levels. So this position currently not looking good, but we just hold on. Now, whenever this has happened, the market has traded back into this, assuming, because at that moment in time you'll be trying to find reasons as to why maybe this position can hold. We have this fair value gap over here, so the market has actually traded into it. But what happened next is we formed a bullish fair value gap. Whenever this scene has actually happened, and you see how the market is actually printing out, meaning this position can be this swing high because we have nothing to resist the market from going higher again. This position can be a loss because of what is happening. Bullish fair value gaps. We have traded. Maybe you can call this liquidity sweep. We have bearish fair value gaps that are not holding. But market is also there's no any resistance. So with this position at this moment in time, what I'll do, because I'll trade my stop loss to this high, I'll also trail further to this high to maybe reduce even further my position. Because if indeed we are bearish, we are bearish, we shouldn't break through that. We should displace lower. So with that, nice one. That is holding. Now this is our trade position. Happened nicely. We had lots of consolidation within that range. Since we are bearish, the other thing is we don't want really to see the market doing its job because we have nothing really to consolidate within this area. We are inside premium, assuming from this swing high to this swing low, we have nothing to maybe consolidate within at this moment in time. But remember, it's the market. We can't control the market. It can do whatever it wants. But with how price is printing, this consolidation, no bearish fair value gaps, it doesn't really look good, and that's why it's really essential for us to be reducing our risk always. Market, and whenever you are reducing your risk, always remember that you don't need to blindly break even. Don't need to actually blindly break even. Just look for reasons why I should maybe trail my stop loss, not to break even to this level. Is it valid? Because sometimes if you are trailed maybe your stop loss to break even at this moment in time, you could have been taken out at break even, which is not really bad, but also you are too quick. You are too quick for you to be in that trade. But as of now, you can see the market, we had reason to have it here because if we were to break through this high, then we would go for our stop loss. And now what we can see also, we have this as intermediate term, a swing high, a lower swing high, also a lower swing high, both on the right and to the left. So that's a valid level to have our stops. And currently, yeah, at market pushing through below, currently in profits, yeah, pushing. At this moment in time, now, is there any reason for us to break even? Is there a reason for me to break even? I'll identify that from the 15 minutes time frame. From the 15 minutes, we have displaced below over here, and we have disrespected a 15 minutes bullish fair value gap. Now, if we trade into that and displace lower, closing below actually this candle low, then I can break even. So using the 15 minutes time frame, nice, we had that. We didn't really trade into that fair value gap. We kept pushing lower, then boom. So this sometimes this happens. It happens so fast. Whenever you are trying to think, should I actually break even? Should I let it be? But whenever we form these fair value gaps, right? Whenever we were forming these fair value gaps, and as the market was trading, assuming we didn't really do that, so we can say where we had our stop loss. I think the initial position where I had my stops was around here, and now I've reduced it to this point in time. So you can say for the first this trade would have been a loser. So I'll ensure that have my statistics over here. I will be forming what I refer to as maybe some data collection of data, because that's what I want us to be doing. So let me find tools, yeah, text, where I can write something. So for now what we have is, oh no, actually highlighter, we have text, come here. So I'll have wins, I'll have losers, and also I'll have a break even. To keep currently, we have, let's say, a loser, we have one, yeah, one, with maybe, how can I say, let me have RR also below BE, let me have RR. For the first position, we've seen that we did reduce our risk to maybe half. So assuming that with that position, the RR is 0.5 RR. So with the first position, we have a 0.5 RR loser. Yeah, something like that. It should be wide enough. So we have one loser, we have, which is minus 0.5. Then the market actually retraced back to this to our level where we had our stop loss, and that's where we call it actually a day. If you go to observe maybe from the 1 hour time frame, if you observe the 1 hour time frame, and what I usually do is immediately I've taken a loss, what I usually do is I don't really rush in immediately. Maybe I can just let an hour slide, maybe an hour or 30 minutes, then try to come back into the charts and try to observe what is actually happening. For now, what you can see is it was a loser. The market has pulled back into this range, and now we'll wait until maybe tomorrow again to see what actually happened. So I'll get rid of all this. We have a clean chart, but our statistics should always maintain wherever around there. Now, if we go back to the 4 hour, I'm waiting for the replay. Yeah, if we get to go back onto this 4 hour, what we'll notice is, remember we're still bearish. What we have formed is we have formed this 4 hour fair value gap overlapped over this area. We don't have actually a fair value gap. We don't have. I thought we had. We didn't have a week over here. We don't have a fair value gap, so I can get even back to the 8 hour. Excuse me. From the 8 hour, what we can see is the market didn't really sweep that high, didn't really trade into that immediate rebalance level. And for this next candle, did we sweep the prior candle high? That's the only thing that we can say the market actually did. We only swept this high, the prior 8 hour high, and then the market passively dropped lower, and we haven't really reached our target. We didn't reach this, but we have retraced back. This gives us even further that we can actually get a good trade within this level and also push the markets lower. So we can try to find what could maybe from this level push the market going lower. From the 8 hours, we don't have any fair value gaps, we don't have any immediate rebalance because it is automatic. It has already been created because this low, this candle high and this candle low have already overlapped. We don't have a fair value gap. So having that, I can drop onto the 4 hour, try to find that immediate that context area. They're waiting for this thing to respond. It's usually slow, but here we go. So from the 4 hour time frame, same to 8 hour, we can notice that candle high was taken, then the market impulsively dropped lower, creating a bearish engulfing bar because this candle has already swept the prior candle high and also closed below the opening and the closing price of this prior candle. So what I usually want to do is from the high to the low, the whole range of that, I want to see the market either trade into the 0.25 level or the 0.5 level and then continue, maybe have a continuation going lower. So because we have already traded, this is the 0.5, meaning we have already traded above the 0.5 level, which is below 0.5. So we want to see, do we have anything around the 50% level or also even further deep into premium levels that could make the market gravitate lower. So at this moment in time, let's see, by New York time, 9, so it's kind of far away. But since we have this target, what will happen? And also remember, we are in close proximity to our initial target, which is this loss. So for now, what will happen? We have any 1 hour fair value gap. We have a 1 hour fair value gap overlapping with the 50% level. Could we see a trade into that fair value gap, then continue lower? Let's see. Yeah, we trade into that 1 hour fair value gap overlapping with the 0.5. And what happened next? We saw market form a fair value gap, but with this candle, I've seen a sweep of the higher prior candle high now dropping. Will we disrespect this bearish fair value gap and maybe form another bearish fair value gap that will push prices lower? Let's see. Yeah, with this next candle, we have disrespected this bullish fair value gap. We have swept within that range. We are within the 50% of that engulfing bar. Now I think we can drop off at the 15 minutes time frame and see, are we during London? Are we in a major time frame or a time kill zone? That's what I mean. So we aren't really in a kill zone, but what we've seen deliver, we have seen the market deliver into the 50% of that EPP. We have seen the market trade into that 1 hour fair value gap. We have seen a sweep of liquidities here, and now currently we want to read the current price action. We're seeing sweep of liquidity, engineer of liquidity, first fake move, price pushed back, swept those highs. Now we are dropping. We have closed below this level with the second candle of this. So sometimes, because we are seeing, it seems we have confirmed a market structure shift because this candle actually closed below this level. Now, the biggest question to me usually comes is, should I take a position here or should I wait maybe for the next candle to open, confirm a fair value gap, then enter my position? I usually sometimes try to reason, maybe I do have my discretionary mind on. Want to see, can the next candle just open and just continues pulling lower? I'll have to confirm with the 5 minutes what the 5 minutes is doing. 5 minutes, we have a nice bearish structure over here. Market swing high was swept. We have this as the lower high, intermediate and high. Nice one. We have a bearish fair value gap being respected. We have another bearish fair value gap. Yeah, if indeed we see market trading to this, yes, we can exert some small drawdown, then expect maybe the real move to happen. Then we had the 5 minutes opening, dropping back. Then we have this. With these 3 candles, we can confirm the 15 has already closed. 15 time frame has already closed. And how did it close? We have confirmed now the fair value gap, what we wanted to see. Now we have market structure shift with this fair value gap fully confirmed. Now from there the market tanked, retraced back into the lower fair value gap, then we pulled lower. At that moment in time now, I can break even at this moment in time because we are respecting bearish. We have already broken structure. Still still holding on under this position. Right there. Let me increase kind of the speed. And then it is per second. Yeah, so we are confirming bearish structures over here. Market traded back into that level. We pulled again down into this level. Around we're gonna be opening a new day. Yeah, what you can see, a week maybe to sweep all this. Could we just continue higher, or we could see the final TP being met? Oh, I did move it. All right. So with this position, I think the entry was around immediately this candle had closed. What you can see is the market came close. We wicked that. We wicked all these liquidities over here. Then we started displacing above this level. Then we rallied back to break even. So because we wanted to see a 1 to 2, right? And this 1 to 2 actually has not been prevented. But how would I have managed this trade whenever we saw the market maybe break through respecting this? My stop should have been from break even, because we're having new intermediate term highs. We have this short term high, lower high, and also we have this lower high. So maybe I could have had, not maybe, I could have had my position with a stop above this level, which happens to be a 0. Let's say 5R. So we can call it a break even, a 0.5, because it's not a win. Then the market retraced back to the entry point, right? So let's highlight our this one. So we have one break even, one BE, which if I've gained 0.5 and I've lost 0.5, meaning currently the RR is at 0. So the RR is at 0. If I had, yeah, the RR is at 0. We have balanced off. And now what is happening? We have retraced to break even. Now let's see what the 1 hour time frame actually has. So the 1 hour, remember this is the 9 a.m. So we can have that there. What has caused this retracement back into this, and how is price printing at that moment in time, is we are seeing this fair value gap nicely respected. Currently it is respected because this candle has closed above that level, and also we have traded above this 1 hour fair value gap. So from this moment in time, what actually happened? The market plummeted off this level, dropped into this bullish fair value gap. Could we expect a disrespect of that? If we see a disrespect of this fair value gap and maybe a closure below these lows, do I have, yeah, if we have a closure maybe below around, yes, that low, if a 1 hour candle closes below this low, I guess yes, we can have it because we are in a bullish fair value gap. How does the next candle print out? Yeah, we did closer below it. Now I can drop maybe onto the 15, but remember we have the opening at around 9, so that will hinder me from taking a position. Maybe I wait until 9:30 actually opens, but whatever we are seeing is something really nice closing below. We have a fair value gap. Maybe it can be an ideal position to take over here with my stops above the 15 minutes fair value gap and target here, but Need to be careful of that 930, so I wouldn't really take it. I consolidated there, heading to 930, and there we go. So 930, oh, no, this is the 9, so I need to have it at around 930. Yeah, there we go. See what 930 had. 930 opened, and then the market has pulled going higher. So I'll play uh, 4 more for a candle to close at around 10, so that we may observe what the 1 hour did. All right, so 930 actually, if I get rid of this, this is where I think we had the market trading to this level, and whatever I wanted to see is the 1 hour this 1 hour time frame. What happened? What did we have at that moment in time that caused 930 to open? Did we have any fair value gap? What you can see is we had this small 1 hour fair value gap over there. We had a small fair value gap that you can see the market traded into, very small, traded into that, and then somehow we rejected nicely, respecting also this bearish fair value gap. So immediately this candle closed within this fair value gap. I think, to me, I was to be ready to look for a position. Immediately this 930 candle opened, closed, the 9 a.m. candle closed. Want to see the price action within the 15 minutes time frame, and also try to see from the 5 minutes time frame. So from the 15, we had that 1 hour. We also had the 15 minutes fair value gap. Market traded in that, rejected nicely. The next time candle traded also higher, rejected. Let's see from the 15, 5 minutes, I mean, also. So from the 5 minutes, what we did, we actually will have say nicely trade into that 1 hour fair value gap, also 15, and drop. We had a pullback again to the OTE of this price leg. The first fake move had already happened at around 940. Then these displacements going lower from the 5, and also maybe a close below this. This is where I should have maybe been looking for a position. Immediately we closed below this 1 hour fair value gap, below that 1 hour fair value gap. I don't really want to be going below the 5 minutes, right? My position should be valid within the 5 minutes. So how I should have interpreted it at this moment in time is something like this. We've seen the market trade below into this 15 minutes fair value gap. This fair value gap should be doing its job, and its job is to actually um let me have it's to do something like this. It's to ensure that price traded into this. Then we see a displacement above this level. We see a displacement. This note and I'll highlight, it can't help me. Then what we want to see is something like this. Let me use a tool that I'm used to. Where we here of this fair value gap, which was nice, into this fair value gap, then a displacement, because it's a bullish fair value gap, and we've seen that from 930 the market expanded higher. If we were to be bullish, want to see the market trade above this high with other fair value gaps, maybe trade into it, and then we continue higher. But it failed. Why? Because what the market created wasn't that. The market, that fair value gap, that level, didn't do its job. And what we did, it's a scene where we have somehow a bearish price signal, because price pushed higher of this fair value gap. Again, we started displacing lower, closing below this bearish fair value gap. Whenever we saw that, and we are not forming any bullish fair value gap, we're not seeing any displacement, what I usually do is I wait for the next candle. If the next candle opens and closes a bullish, something like this, if the next candle opens and closes a bullish, something like that, this is a bullish candle, then I'm gonna be bullish. I'm gonna be bullish if we see that. But if also we create something like this, a bearish candle, or maybe with a long wick, or maybe we have a bearish candle that has been formed, something like that, then the next I'm entering my position, because also we are now respecting also this bearish fair value gap from the 1 hour time frame. So seeing this, I'll play one candle, and since it's a bearish fair value gap, now over here I should have taken my short. Now where do we have my stop loss? Should it be above this level? I think that's an ideal place to have it. But also I usually always try to see, this is my long-term level that I have over here. What I usually tend to do is I try to refine my stop loss. This is an intermediate term high. But again, if we tend to see, we retraced into the OTE levels. Whenever we have retraced into the OTE levels of this initial price leg that created this, I'd really wish usually try to have it at that high, because if the market breaks through this level, I remember that candle that I've already drawn you before. If the market displaces bullish, then this high will be what the market will be going for. And since it's a good place to have my stop loss, so I need to have it there and see whether it can give me a 1 to 2. There we go. But at this level, I should be breaking even or even closing 90% of my profit. Let's see. I think the next candle plummeted, drop lower nicely. Next one drop nicely, and finally, this is the level that I should be maybe shading off something. If not, so my stops I think should be around this area, If in case the market doesn't rally straight to my TP. So having that in mind, so my 1 to 2 should have actually been hit, and that's how maybe we could have gotten the first win for this week, right? So this would have been a 1 to 2. But if we'd had it at this moment in time, our TP, a 1 to 2 would have been even much lower, which I don't really usually want, because whenever I have a higher time frame target, I should be having it somewhere there. So I need also, I've been working on my placing my stop losses, and that's why if I should have this other than this whenever this price has rallied to the OTE of this price leg. But if we had this at around here, below maybe the 50 price leg of this, then I don't think I should have had that as my position. So update this one. Need to update it. So the first win. So we have the first win, and now we are at a 2RR for this week. So having seen that we have already reached our weekly target, I think now we can delete everything. If you have any question, feel free to reach out. I see firstborn. If you have any question, feel free to reach out. So the pair is Nasdaq. NAS 100 or US 500. So that's the pair I'm trying to. Lately, I've been getting some payouts off of. So yeah, so this is NAS 100. So having this now, I think I can get rid of all these things and go back to again the drawing board. Start again somehow fresh, because always whenever you are starting a new day, this will have been on Tuesday. So on Tuesday, by Tuesday, I've taken one loser, one break even, and also one trade, one loser. So can get rid of that. This was really good, and that's why it's always good to trade always after 9:30 open, because this volatility usually comes. We have these fair value gaps. Yes, you can trade them, but they are there for a reason. They are there for 9:30. So seeing that, I think this one should maintain, and this one I should get rid of it. And this is the daily. I made it rebalance, still maintained. So we have already traded into this. Let's see the 8 hour, how the market will have actually printed out. Give it some time. There we go. So the 8 hour was kind of choppy, not really aggressive moves towards the target, but finally the market reached there. Finally the market reached there, and now want to go to the daily time frame. Since we are still in Tuesday, our first target has been met, and that target was the bearish fair value gap or the previous week's low. And since we are in a long-term bullish, we don't want to be holding these positions for long. So since we are here again, we want to do some further refinement and also a fresh analysis on this new day. So on this new day, I have a flu, so pardon me. So from this one, from the daily, what I usually come to do is whenever we are at a key level, I mark up. If we are bearish, then whatever should be attracting the market going lower should be that. And if we turn bullish, whatever should be attracting the market going higher, we have the prior day high, and also we have these other highs that we can target. And then later on, we can expect maybe to see the market rallying bullish. So the next target, if indeed we're gonna be bullish, this will be the target, the prior, those highs, and also these highs. We had some nice rejection. What we can note also is we're having a sweep of liquidity over here. The previous day low is currently being swept. So we have a major liquidity sweep from the daily time frame. Right there. Seeing this, now I can drop off maybe to 8 hours to observe what is happening from the 8 hour time frame. I will be forming a new Google sheet that we can be tracking, we can be backtesting and all those stuff. From the 8 hour time frame, we have this as the prior Monday low that has been swept. You can see the rejection. Also with this candle, we have the market rejecting. This next candle will be opening at around 17 and run to the next day. So if indeed we'll be bullish, we have the prior day, and also we have this swing high that was created over here. Yeah. So we need to go to the 4 hour time frame, wait until the New York time opens, then we can try to engage with price. So let's give it some few minutes. So there we go. So remember, want to be trading during the New York time to avoid lots of stress and also to avoid being into charts during hours we shouldn't be. So let's have it 5 to 8 so that see what the market should have done at that moment in time. Prior day low, we have the prior day this Monday low swept. We have the PDL if we're gonna be lower, and we have the PDH if we're gonna be bullish. Then later on we could see or what will be happening within this range. And what we can see at this moment in time is there's no fair value gap that has been formed for the bearish side. Don't have any bearish fair value gap, which is a sign that why? So it's a clear signal that there's weakness in sellers, and also all the bearish fair value gaps within this price leg have been swept. If indeed the market will be bearish, we need other bearish fair value gaps. But if we start breaking through these swing highs, then I think the move from here will be very fast because we have nothing to resist the market going higher. So at this moment in time, we can play until 9. Yeah, there we go. One more candle. There we go. So at around 9, what the market actually has done before that moment in time is liquidity sweep into a higher time frame. We have spooled, forming a 4-hour bullish fair value gap. And if we have a 4-hour bullish fair value gap, I need it to be here. We have this 4-hour bullish fair value gap. And there we go. So at this moment in time, what should I be maybe waiting for? Maybe I trade into it, and if we break through these highs, because we're going to be observing from the 1-hour time frame, so let's drop onto the 1-hour time frame and see what the market is actually giving us from the 1-hour time frame. So from the 1-hour time frame, it seems we are forming a new structure. We are forming a new bullish structure because we have this lower low that failed to create a lower low, right? Now we created a higher high. This fair value gap seems to be like respected because there's no fair value gap closing below. The market has been creating higher highs. We have a new higher high with also this newer higher low. Now it seems that we are shifting into bullish, but we have this 4-hour fair value gap, and also we have 9:30 opening. So what I'll do is I'll wait for the 9 a.m. candle to close. All right, so here we go. With the 9 a.m., we have already taken the prior candle high, and we have traded into this 4-hour fair value gap. So within that fair value gap, how is price printing? How can I get, because this is a 4-hour fair value gap, it's bullish, a bullish one. Now we don't want to start maybe looking for I've slightly moved it. It was at that low. So since it's a bullish fair value gap, and what we are saying is we are forming a bullish structure. We don't want to engage maybe sharply in trying to look for short positions. So within this moment in time, around 9:30, what we could see is we're still in premium. If we have the high to the low, maybe could we continue lower, or if the market should be reacting off this fair value gap, then we should see some nice displacement above this level. And since we have this as the next target, and we saw from the 4-hour time frame there's no liquidity, there's nothing, there's no resistance, we have only liquidities, then I think we can get a position within this level and target a 1 to 2. And next we dropped even further, deep further. We are not trying to look for shorts. Then here we go, market, boom, we close bullish. Now, since we are closing bullish, the market has reacted nicely of this bullish fair value gap. I think at that moment in time, I could have my position in. And also, since now we are displacing above the PDL, I should have my long position. I have don't I have any long tool? Let me see. So from there I should be taking a long position. Patterns. Okay, where do I have my long position tool? Measures. I think this is where I should be having. Yeah, we have this long. Immediately it closes there. And where should I have my stops? Let's see from the 5 what we have actually got. From the 5, I think we also have a nice structure, very nice structure. Sweep of liquidity is placed. We had that fair value gap. Immediately that one closes. Where should I have my stop loss? Because that is being respected, I can discretionarily have it at this. It should be at this low. but it has already done its job. We have swept liquidities, we're displacing. So can I have it slightly below these bodies? Because we have no any other swing low. If the market drops maybe to a given swing low, it should be this low. So I should guarantee that maybe below at around that these bodies, or maybe this candles low. I don't want to have it there, and see whether we can have a 1 to 2. So yeah, this is the long-term target. Let's see whether on Wednesday market pushed back again. We kind of consolidated within the break-even from the 5, then we pushed higher. With that push, we confirmed a bullish fair value gap there, which is nice to see. Kind of respected, kind of consolidated again. So where should I break even? Break even, I should consider maybe the 15 minutes time frame, what the 15 is actually doing. We confirm this 15 minutes fair value gap. We have displaced, formed no fair value gap. I haven't taken even that liquidity pool. So as of now, yeah, I can maintain my stops still, other than trying to rush in, take it out. Yeah, we consolidated here for a while, really long. We were here for long. Yeah, seeing that displacements now. Where the market has actually, and now we are at the end of the day. We have retraced back into this fair value gap. Still holding on. We haven't really break even. Pull back again. So at this moment in time, since we have traded back into this fair value gap and we have displaced nicely, now we can see fair value gaps being created. Now I think I can move my stops towards this low. Move my stops towards that low then. And if we break through that high, this high, then I should break even now. So seeing that we have taken these that high that you wanted to see the market gravitate to, we are also kind of forming 1 hour fair value gaps over here. Now I think I can break even. And what's the time with this position? It's around 1. I should be mindful of the next day, 9 a.m. So I need to have a line to remind me. There is someone calling me. Hello. Yes. Na nini? Hello. Na aje, as in sikupati. Wi-Fi siko nyumbani sahi actually. Niko wera actually. Actually nikifika home around maybe 8 hapo hivyo. I think nitakufixia around 8. Haiko on toka juu tulilipanga kitambo sana, actually sijajua. So nitaangalia around 8 nikifika mtaa. Sawa. Alright. With this, since we are forming these bullish fair value gaps, now I can break even, and I want myself to be mindful of around 9. Around 9. Yeah, there we go. All right, there we go. We are having these fair value gaps here. We have swept that liquidity, and long term here, want to say the market gravitate to those highs, but as of now, we are, I think, at break even. Market dropped. Yeah, was I caught? Not really. Yes, it seems this will have ended at break even. This will have ended at break even. So later on, we can see the market respecting this. Before 9:30, there's no need for me to add a position. Then we dropped back again to that range. All right, there we go. This was the 9. So 9 has already closed. So this position that we had from yesterday, I think it has break even, meaning we have made nothing, no RR, but we can call it as a break even. So currently we have 2 break evens and 1 loser and also 1 winner. We have 2R for the week right there. Now, since we are at around 9, let's see what the 4-hour actually has. I'll cancel the 9 a.m. candle and let's replay over here 9. No. This is the 9. Yeah. This is the 9. Yeah, so at around 8, that's where we can get to see how the prior 4-hour candle closed. So it really closed bearish, and what we can read is, since this trade has been confirmed bearish, we can get rid of it as a break even. I mean, not bearish, but from here what you can see is the 5 to 8 a.m. candle really closed very bearish. So if it was really bearish and we have this fair value gap that was being respected has not done its job, then most likely what we can expect maybe during that point in time to see this low being taken at around 9. Maybe this could be the low that could be swept, and then we get to see the market gravitate higher. Let's see. Because we are in a bullish trend over here, this fair value gap, I think it was respected. Yeah, that was respected, meaning we can't use it, and want us to go to the 1 hour time frame, and that's where I'll need to draw my fib levels. Should I use this as the lowest low to this high to determine whether we are in premium or discount? Also, or should I use this low over here? I'll determine that from the 1 hour time frame. So I've dropped on the 1 hour time frame, and from the 1 hour, what I can notice is the market pullback drop into the OTE, meaning from this low, can't use this low, but this other one, we have this as the low. Now this is the one that initiated this pullback up to this, and now kind of we are reversing, and since we are in a bullish trend, I can't really be keen with these bearish ones. Don't want to take any bearish trades, and sometimes whenever maybe we are bullish or the market is more of one-sided, we tend to manipulate, and whenever we are manipulating, we need to be forming this, so that maybe those who are wrong, those who are maybe shifting their bias, can have reasons to enter their position. So at this moment, I'm looking at this low. Could we have a sweep and then we push higher, or what will be happening around that area? So I'll let the 1 hour play. Then we traded into this bearish fair value gap, after also sweeping this low, right? I need also to consider major liquidity pools, because these major liquidity pools also act as a reversal points. So the market might fail even to retrace because it's one-sided, might fail even to retrace to the 50% level, but you need to be mindful of it. You need also to be mindful of liquidity pools in form of this. Also measure kill zone liquidity pools. That's what I call as the major liquidity pools. Prior day high, prior day low, prior week high, prior week low, prior month high, prior month low. We also have kill zone highs and lows. Those are major liquidity pools. And if we try to consider from 2 to 5, we had these are the 2, and the lows has been taken. We have the 5, which is the London highs. We have seen the market sweep that during 6, and also we have confirmed another sweep back into these highs that were already traded into, and we've seen the market displace nicely. At this moment in time, I'm yet to take a position. Why? Because we are inside a bearish fair value gap. Could we see how the next candle will print, or I need to mark up how the market reacts to this candle high? If indeed we are bearish, what I want to see the market do is sweep this current high and then have a drop going lower. But if the market displaces above that from the 15 minutes time frame, and also we respect bullish structures, then I think I should maybe now try to add another position in, looking for bullish prices. So this is the 1 hour high, and then we didn't really confirm a bullish fair value gap. We have swept that, and the market dropped, not really a good sign. Then the market dropped again lower, back into the into the 50% level, and that's why it's always ideal to be waiting for confirmations. So the market dropped massively tapped into the 50% level. Exactly, we have retraced back until we break through these highs. That's when I think I should be engaging in price going bullish. We consolidated there for a while, we didn't really break through that level that I was watching, the 1 hour candle high. If we break through that, nice. Oh no, this is the candle that broke through it. So allow me have a replay at this moment in time. So immediately we've had this break. Now I should be looking for an entry, a long entry around this moment in time. And where should be my stops? Should my stops be below that level? Let's identify that from the 15 minutes time, 5 minutes time frame. We have broken through that. We have a sweep of liquidity broken through that structure. We have these fair value gaps. I think below this, the bodies, I can use the bodies. That's where I can have it and have a 1 to 2, and yeah, it will be within that long-term range. Yeah, because this is the final target where we want to see price delivered. Formed a nice displacement with fair value gap there. Consolidated for a little bit. We came close. I don't know why these positions usually come close to the TP, and then we tend to consolidate there a lot. But yeah, we still hold on. Let me go back to the 15 minutes time frame and try to observe the structures over there. We are forming these fair value gaps. Want to see these fair value gaps hold and then push prices higher for me to break even. Immediately we rallied back to entry point. When was it? Thursday around 14 during the New York PM session. Then we pulled back. That's why it's always ideal to consider when to break even, right? Assuming we had formed that and we break even, yes, it could be a loss, but how would you have entered this position? Now, since we have formed this low and we have this fair value gap, if we disrespect that, then I should break even. Yeah, this candle, this is the candle that traded into that 15 minutes fair value gap. The market has closed above it. Then I should break even at that moment in time. Yes, confirmed fully. Then now my stops are at break even. Then the market pulled, and finally we've hit our 1 to 2. So something I can learn from this position is when to break even. When to break even is actually necessary, other than trying, whenever we've seen bullish fair value gaps being formed, other than trying to break even at that moment in time, it's not really ideal, because this can be also be traded into market, traded down into it, it's pulled higher, and we have a 1 to 2, and now we need to adjust our again we have two winners for now, two winners, and now the RR shifted from 2 to 4 RR right there. So with that day, I think we can close it and maybe go to the 4-hour time frame and try to see what the market has actually done. The market's pulled bullishly, and that TP has been hit. Now we wait until the next day New York time, because that's where we want to be capturing our positions during the New York time after the open. So we have the vertical line, ensure that Friday, currently we are on Thursday, let's see what Friday has around 9:30. I should, yeah, that candle. So because everything has already printed out, still the same bias. Remember, we don't have any resistance here. If the market is confirming bullish, and currently we've seen the market is confirming bullishness, whatever we should expect is to see the all-time highs being taken. And around 9:30, what we can see is we have this 4-hour bearish fair value gap labeled here. So this high is no longer valid, can get rid of it. So we have this bullish fair value gap that has already been confirmed. Can we see maybe the market trade into it before? So that then at around this was 5 a.m. to 8 a.m. candle, what you can see is the market massively dropped into this 4-hour fair value gap, and then we rejected, right? So from that's 5 to 8. Now we can go into the 1-hour time frame and try to see what is actually happening there. So we have still the all-time highs maintaining on as of Friday. We still have the all-time highs still maintaining, and these fair value gaps are being respected because there is no candle closing below it. And then we have the next candle as 9 to 10 a.m. So I usually want to see it play out, and then what we can see is we had a drop into this level, but we formed a 1-hour fair value gap. So within that 1-hour fair value gap, could we see the market trading to it and then continue higher, or should we just continue higher to these all-time highs? Since I don't usually love using inversion fair value gaps. I just, because it has already been traded into, and we have seen it close above this prior candle higher that traded into this fair value gap, then it's signaling bullish prices. Since we are bullish, now what is my context? Either the immediate rebalance. I need also to ensure that I have my immediate rebalance, which is over here, and should be dotted red. Yeah, that's how I identify my 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 IRs, my immediate rebalance, whenever we don't confirm a fair value gap. So this is how 9:30 traded. We pushed higher, and now we did consolidate. We have the immediate rebalance yet there. We also have the 9:30 lows over here. We also have the 1-hour fair value gaps over here. So if I should be bullish, then I want to see if this next candle will close bullish above this prior candle high. So if we see the market closing bullish around that high, then I go in for buys. But for now, I'm not yet in a position. I shouldn't be in a position. So we play the next candle, drop, massive drop, traded into that 1-hour bullish fair value gap, also swept the London, the 9:30 low, and have we traded into the OTE levels? So we have this fib, and see that we have traded into this fib levels swept. And now since we are inside the 1 hour fair value gap, I can drop onto the 5 minutes time frame, try to see whether I can catch a long position. And where should I be looking for a long position? Now not from here, because we have already dropped massively lower. I think the new area I should be trying to look for a bullish case is that high. Why? Because we are inside that 1 hour, a key level. We are sweeping liquidities in form of a major liquidity pool, which is the 930 low, and also we are into the OTE levels. We have price also trading into this 15 minutes fair value gap over 5 minutes fair value gap. So if we get to close above this bearish fair value gap, also above that high, then I can't risk and take a position. We didn't really do that. We swept that and dropped lower, not looking for anything, dropping even further. Then we displaced nicely. Then we closed with that candle. So immediately that candle has confirmed that I should maybe take in my position, my long position with this candle closure. Where should be my stop loss? My stop loss should be maybe at the bodies other than the lows over there, and maybe have a 1 to 2, which maybe was to be around the all-time highs. All-time highs there. Let's see, market displaced fair value gap nicely. Want to see a trade into that fair value gap, didn't really happen. Market continued bullish. Then we displaced above those highs nicely. So at this moment in time, we are forming fair value gaps. And how is the 15 minutes maybe reacting? 15, we have these fair value gap slightly above break even. We have confirmed another one. So at this moment in time, I think I can't break even because these fair value gaps maybe should be holding prices higher. Yeah, we have that low being formed, a trade into it. I want to see now if you're bullish, displace above, but this is not a good sign. Since we are seeing now the market displacing at this moment in time, I can't be confident with my break even because we have traded into this. We are closing above that, and even if we go to the 30 minutes time frame, you can get to see that this candle is respecting the 30 minutes fair value gap as well as the order block now at break even. Then immediately we can get to see the market massively drop, which is not a good sign. And at this moment, since I'm break even respecting this, I wanted to see this fair value gap hold, price running through that high, but now we have actually traded into it and maybe had a small sweep. So since we are at the main target for the week, the prior week high, since we have reached it, so other than maybe trying to let that one hold, I can maybe trail my stop loss around there, then seeing how price reacts within this level. I don't really want, and it's late during the Friday night, so I think I could close my trade there and then let all this run other than waiting for this close. This was a signal since we have been in close proximity and maybe had a small trade into that high. It could be a small sweep, then the market showing this weakness. It's a sign that it's not looking good with this nice reaction that we had over here. And then this maybe could have been closed at around a 1 to 1 R, 1 to 1 R. So we can call it a break even. We can call it a break even with, so we have currently 3 break evens, and also the RR, let's assume we have it at now 5 R for this week. So this will have been the statistics that we could have had for this week. From this backtesting, we have 2 winners, which gave us a good 4R. We have 1 loser. That actually was a full loss. I think it was a full loss. And really, was it a full loss or a break even? So somehow a break even, but label it as a loser. We have 3 break evens. So from this week, we could have had actually 3 plus 3, 6 trades for the whole week. which I think is really good, really good. And I think that we are waiting for the main time during the New York time, New York Open, having three break events and 5 hour, and I think that would have been good. If in case you are risking a one 1%, then this would have been maybe 5%, right? 5% for the week, which is really ideal. So this is the back test for this most recent week, which was from May. Let's see what it was from May. Monday was on around here from 18th to Friday 22nd. This is the back test that we had, and these are the statistics that we could have had with this trading model. So 5R, I want to be recording a Google Sheet whereby we will be storing all this. For this week, we have 2 winners, 1 loss, 3 break evens, and the total risk to reward was to be a good 5R. With a risk of 1%, you could have closed the week 5%. So that is all for this week and for this video. Looking forward to catch up with you guys maybe next time. But as of now, we can call it a moment and close it at this moment in time. So until next time, guys, be safe and see you next video.